Welcome, everybody. We have a very special guest today. And Dave, just to let you know what this is, I run a founder group for AR, VR, 3D frontier tech founders. And so every Wednesday, we'll bring in a special guest and kind of do some sort of coaching session around fundraising, startup building, hiring, everything in between. So I found our original message, which was from 2018. And let's see if I can go full screen here. So I said, hey, David, I made 50 AR VR investments in San Francisco from a fund I started, and now I'm moving to London to start a VR company. Would love to meet. And so that was back when I was a 25-year-old, and we've managed to stay in great contact through LinkedIn messages over the years, just constantly talking. So I appreciate that. There was actually another message to this where I was like, I think I was 27 and you had shown up 5 minutes late to a meeting or something. And I was like, that's so rude, blah, blah, blah. So I was out of control. I want to apologize for any of my past actions. But
I don't remember that, but yeah.
Yeah. Don't scroll back. I was reading and I'm like, oh man, I'm the horrible person. Okay. But yeah, so you're an epic investor and I was looking through all of your deals. Thanks for sending those over. I mean, this is unbelievably great, a great fit for what we're trying to do here with the Spatial Collective. The first deal, micro LEDs for XR. The second one, deviceless mixed reality, 3D avatars, 3D generation of assets, 3D capture pipelines, browser for the metaverse, game studio, AI generated game assets, gaming in virtual worlds, metaverse, like the list goes on and on and on. I highlighted all of the related words. And I know, basically your overarching thesis is not just AR, VR, it's not just metaverse, it's bigger than that. It's the future and the next era of computing. And so we're very thankful for you joining us today because you have one of the better specialty brains out there for what a lot of these founders that are on the call are trying to do here. Before we get into all that though, I love music. I think music's fundamentally important to humans. I'm a rapper on Spotify, and I also had used SoundCloud for many years. So before we get into the AR, VR side of this, which we can transition because you were BD in partnerships at The Wave, which I think a lot of people are familiar with. They're a top VR music startup. Can you take us back to your pre-launch days of SoundCloud? It sounded like you were with a very small team before they really had the product out there in the wild. And just maybe give us like a little bit of insights of how that startup experience going from nothing to 250 million monthly users shaped your vision for what startups can be.
Yeah, great. Yeah, so maybe a preamble to that. So I started out in the music industry, and it's a phenomenal industry to be in. I think one constant with both venture and people working in the kind of the VR AR spatial space is like you find that it's quite a small industry, but full of, very like, what's the word? Like passionate people. Like you get into music or you get into VR, not because it's the most rational choice. If we were all being rational, we'd all be like, I don't know, management consultants or bankers or doing a fintech startup or something. But I think there's, a level of ambition and creativity and just passion that underpins all of these industries. So music is similar to spatial. It's similar to gaming. It's similar to venture. There's, you'll find all flavors, but I think the common thing is passion. But I started my first business straight out of university was literally a physical record store. So me and my brother, I was a vinyl addict. Our local record store shut down, and I was like, "Oh, I've got a problem. I need to fix it. How do I do that? Well, let's start a record store, and then I'll get records cheaper, and it'll be easier to get DJ gigs." So yeah, I won't give you the full history of that, but that was a pretty wild ride. We had a label. We signed artists like kind of Cascade and Trent Moller and people like that before they were big artists.
Were you a DJ yourself?
Yeah, I was a DJ. I've had an album out. I've had a DJ. I've had a couple of singles out and things like that. But I was yeah, it was always having DJing and then having other people in the studio producing alongside me. So I know my way around a studio, but I'm not a music producer. But skipping forward to SoundCloud, so yeah, I think the other thing that the music industry is interesting for is like music. The music industry tends to get waves of technology first. It gets disrupted, figures out how to deal with the disruption, and then kind of takes advantage of it. And I think like I started out in vinyl, we moved to the internet. At some point I had a MP3 download store, and Yeah, I think for me, I was always kind of looking at like, well, what's the next disruption? And when I saw Eric and Alex, two amazing guys, I knew Eric because he was an artist himself and was starting SoundCloud, and I just read all of his blogs. And he wasn't hiring for anyone, but I found out that he was doing the company before they launched. So I just said, hey, I know the music industry and I like tech. You guys seem like you're building a great product, but like, can I help you? Can I work? Can I come and work for you? So yeah, so I was there. I was employee number 5. I joined in the October of 2008, and I think we launched in November or something. So that was just good timing, and I guess in a way that was kind of the same as doing venture. I wanted to join a music tech company, and I just had to scout like which do I think is the best one. So yeah, there was no job, but I didn't ask. I just went and asked for it, and I managed to kind of prove myself. That was
Did they
actually
raise venture along that journey at like once you launched, did they go raise capital or was it pretty efficient?
Yeah, so we only had angel investors when I joined. Then this is 2008, so the venture market was really tough. I didn't get paid for several months because we were struggling to raise our institutional round of capital. We got turned down by literally everyone in Europe. The only fund that would invest in us was a fairly kind of old school fund called Doty Hanson, which yeah, there's another story that will tie back to that in a minute. But yeah, so Doty Hanson took the first chance on us. I think we then proved it. Just the product like kind of sold itself. Like the next fundraise was a lot easier because we had like viral growth. People could see the product was getting a lot of traction. So USV led our next round. So Fred Wilson at Union Square Ventures, really great.
Wow.
Love Fred. I called my kid Fred after Fred Wilson because he was pretty influential. And yeah, just to be clear, I didn't do the fundraise. That was like Alex. Alex is a world-class
Yeah.
fundraiser. So I was a VP and on the leadership team, but yeah, not in those pitch meetings. But I think for me, that really just underlined the kind of right, this, when I first started my business, I didn't even know what venture was. I thought you had to go and get a loan from the bank and build something slowly. And I was like, oh no, holy shit, this is what venture can actually do.
And so following that music thread and then kind of tying in VR a bit. So you were first number 5 employee at SoundCloud, which I got a million questions, but I'll save that for another conversation. And then from the music side, you move, a few different stones, but eventually you get to being BD in partnerships at the Wave VR. Can you talk about the Wave VR, when you got involved with them and some of the things you were trying to do there? I know it was an early space, but I'd be curious to learn kind of like what were the lessons from SoundCloud versus the Wave VR?
Yeah, so my journey to the Wave was so after SoundCloud. So I mentioned Doty Hanson, the firm that was the first institutional capital in SoundCloud. Carlos from that fund went on to start an early stage fund in London called Seed Camp. And when I left the music industry, I was like, I really want to go and do venture. Like that seems like a great way to still be entrepreneurial, but like kind of broaden the horizons outside of music. So they kind of took a chance on me. I joined the investment team, Fund 3. That fund did pretty well. We backed companies like Revolut and UiPath, which are now kind of 40 billion plus companies. But I think it was 2015. It was Slush in 2015. And I had my first, there was a VR AR accelerator that you'll remember, Don, called, oh no, what was it called? River.
That was my first internship. I worked there. Yeah,
Right,
2015.
okay. So, Mike did a dinner in Helsinki for people who were like interested in AR and VR. And I went along, and that was literally the first time I ever put a VR headset on. It wasn't an Oculus, so I'm not that cool, but it was a Samsung Gear. And it was just a 360 video or something, but I was like, holy shit, like most people in this industry just have that like holy shit moment where you're like, this feels like the future. It's still early and janky, but it feels like the future. And after that dinner, I then basically, because I had a music background, I spent the next 6 months just proactively being like, right, music, like VR is the perfect like medium for VR. It's a blank canvas. You could do so many different things, from performance to visualization, like all these amazing things. And so I just went on, I just got obsessed, and I was just trying to find like what is the best like kind of VR plus music company that I could invest in. and that led me to tracking down Adam, who's the like amazing founder at Wave. So yeah, so Seedcamp didn't even invest in US companies at the time, so I had to take it to investment committee and say, hey, look, like I really want to invest in this. Like, could we please make an exception and invest in this company, even though it's in the US? So to go back to your question, so I was an investor at Seedcamp, and then there was an interim period where I was leaving Seedcamp and was about to go and join HTC, which we can talk about in a minute, but. Adam really needed, like, he had a great product, but was thinking about what's the long-term future of the Wave. And he needed somebody who kind of understood music licensing, knew all of the different, like, you know, labels and artist managers and stuff like that. So it was kind of like putting on a sort of comfy old pair of pajamas. I got back into my sort of business development mode, and just really enjoyed just 6 months being an operator back in a fast growing, exciting startup. And there was a crossroads where I could have gone full time at Wave or continued investing and join HTC. And yeah, I really wanted to go deeper into the investment side, but yeah, if not, maybe I would have continued at the Wave.
Was that Helsinki dinner, the one in Iceland? That
so it was in Finland. Yeah, it was in Finland at a conference called Yeah, and it was in like small Mexican restaurant full of you know, some very early VR adopters and interested.
I helped co-organize that with Tommy Leap. I remember that vividly. That's awesome. Okay.
Yeah, nice.
Wow.
Yeah, well, I met Tommy at the dinner. So
yeah, that's awesome. Okay. Well, so you've basically scratched your itch for music, for venture, and for startups and VR at that point. On your, let's see if I can reshare the screen with this junky old computer real quick. So you've done a lot on the investing side. Seedcamp, as you mentioned, which you had some real winners from that third fund. You moved on to then do ViveX, which is more of a AR VR focused. You know, I think they earmarked $100 million to help enable the VR ecosystem. And then obviously now today you're the founder of FOV Ventures. What between, I guess, HTC Vive's fund and FOV Ventures has changed in your thesis or been refined over that time as you look at deals?
yeah, good question. I mean, the first thing is when I was investing at Vive, you know, obviously it was, you know, we wanted to get financial returns for those investments, but it was a lot more about strategically investing into those areas. So you know, Vive was an early player. Its primary interest was in selling hardware, but it knew that to kind of, you know, it knew that it benefited everyone to try and grow the whole ecosystem. So that was really the function of ViveX, was to, yes, accelerate companies and hopefully get some good returns, but it was also just accelerate the whole industry. And they had a few other kind of, you know, initiatives around like that, like the VR AR VA Alliance or something like that. But I think Vive was very well intentioned on just saying, hey, look, we think this is the future and we do genuinely want to kind of grow the ecosystem. So I think what's changed between then and now, I think the timing has changed. When I was at Vive, I'm not sure you could have set up a specific fund in Europe just to invest in that space. It probably would have been like 2 or 3 years too early, although, you know, still some great, you know, a couple of great companies to invest in. I think that's one thing, is just like market maturity. I think, you know, when we launched the fund in 2022, it felt like we'd gone through the next inflection point or the next part of the S curve in kind of VR specifically. I think the other thing that we did when we set up at FOV, like there was a temptation to say, hey, look, let's just set up a VR AR fund. But for me, like this whole like thing is much bigger than that. Like we didn't really have a word. Like we now say we invest in the next era of computing. I think on our very first deck in 2020, when we started raising FOV, we had we were calling it spatial computing, but just nobody understood what spatial computing means. And I think it's still maybe a bit of a misnomer word anyway. And then, you know, as we launched the fund, you know, every CEO like on the West Coast was talking about the metaverse, and there's still lots of things that I kind of yeah, there's lots of things about some definitions of the metaverse that really resonate. So back in 2022, if you'd gone to our website, it would have said we're investing in founders building the metaverse. But for us, that was always something that was bigger than VR and AR. And it's kind of really, I think it's an evolving thing, but it's anything that is for us is making our software and experiences more spatial. So that means more 3D. But there's a whole lot of stuff that goes into being able to create 3D software or capture 3D assets that are nothing to do with VR and AR. But it's also anything to do with, developer tools that help us for things like world understanding that feed into robotics. It's anything around, game engines are brilliant for building games, but there's virtual worlds, there's social experiences, there's military simulations. You can build a lot more in these kind of amazing real-time 3D engines that we have. So anything that's more spatial, and then anything that's more intelligent. So obviously AI, and I think back in 2022, like AI was at Vive. It was funny. I think Vive was always a company that was maybe like 5 years ahead of its time, but at Vive, like Cher, who was the chairwoman and CEO, she would always talk about the convergence of kind of VR, AI, and like AR, and like there was always a thing about these technologies converging, but it was maybe a little bit too early. Like AI wasn't quite there, VR wasn't quite there. And I think what we did well was at FOV, it's kind of over the past 3 years since we've been investing, all those technologies are really now converging. And we see overlaps in, approach to building companies, like the talent that is building those companies, etc. So it's anything that's anything that is spatial, anything that is intelligent, and then we also say anything that's making computing more human. And that's maybe a little bit abstract, but by that, like there is this kind of dystopian version of like, if we're investing in XR, AI, robotics, like that can feel like a very dystopian, like, oh God, we don't want this in our future. But we think that, once all these technologies converge, then actually it just allows us, like we've been stuck in a paradigm of computing where we're kind of dislocated from our computing. We have these like 2D screens in front of us or in our pockets, but we're dealing with like text and video and like data. It's like, it's not and we're kind of disintermediated from that data by our keyboards or our mouse or by little boxes and buttons. And we just think this next generation will be a much more kind of embodied form of compute. So yeah, that is all very lofty. There should be some words that I can say that in like 2 seconds rather than 5 minutes, but that for us, that is the next era of computing. And if we get excited about AI, we're not talking about an LLM that can power the best note taker for,
right.
beauticians or something. This is like, no, this is like world understanding. This is kind of, our digital worlds blending seamlessly with our physical worlds.
I mean, I think what you're talking about, I raised a fund for VR in the past. I went through this process where it's so hard to frame it. You're going through it. Nanea, who's the CEO of Trip, she's coming to visit us in 2 weeks, and she's figuring out how she frames it around this AI story. All 50 founders on the call have that same challenge with investors, and so we're all looking for that word that can just kind of supplement people's brains, but it doesn't exist. And so how do you? So, you're pitching LPs and raising capital from limited partners. The founders here are pitching VCs. How do LPs respond to when you talk about the future of computing? Is there, interest out there? Are you leaning in on the AI angle as a way to fundraise more efficiently? How do you kind of do that strategically?
Yeah, I think the challenge is the same as the founder, right? So it's, you kind of, and I'm not doing a great job at this, by the way, I'm still trying to figure it out. But I think you have to understand the audience, like who is the person, if you're across the table from an investor, what's the level of sophistication? Like if we're raising and I'm speaking to a 55-year-old who works at a pension company in Finland, then I'm not going to start talking about, I'm not going to describe it in the way that I just tried to describe it. I would just say, hey, look, we're a deep tech fund. Okay, that ticks the box for like, LPs are really like deep tech at the moment. And then saying we invest in, AI, and I'll say that first because they know what AI is. And then I'll say kind of, VR or an AR or 3D, or like, I have a few different versions of what I would describe ourselves. But I think as a founder, you kind of also need to read the room when you go in and pitch VCs. Just kind of try and calibrate as early as possible on kind of their level of sophistication. And then you kind of have to pitch to whatever it is. So yeah, I feel like the pitch, we're just about to go and raise fund 2. So I haven't nailed the pitch, but my job in the next month is basically to nail that and have the different versions, like what's the short version, what's the long version, what's the sophisticated version, what's the non-sophisticated version. And I think I'm assuming most people on the call are kind of VR and AR founders. I think there's an extra bit of homework where you need to understand, has the investor invested in this space before? That could be a positive. That could also be a negative, right? Because I feel like we get pitched by founders who are maybe doing things that we saw a lot of 3 years ago. And actually, I'm probably more skeptical than somebody that never invested in VR because I've got the kind of the battle wounds of, you know, the previous generation of companies that died in that particular space. So yeah, I think just kind of understanding who you're talking to and then adjusting to that is really the best way to do it.
Now, looking through your portfolio, you can see this, right? The full screen here.
Yep.
Okay. So yeah, so for anyone who showed up late, Dave has a lot of stuff in the 3D, metaverse, gaming, AI generated game assets, like a lot of that stuff in that space. But zooming in, there are some VR companies, I'll call them future of spatial computing or future computing companies that have done really well on the fundraise side. So Ready Player Me, I believe you're a personal angel into that company. Is that true?
Yeah, that's an interesting story. So I actually met Ready Player Me. They used to be a company called Wolf 3D, and I met them when I was at Seed Camp in 2015 or 2016. And I still have the thread in an old kind of archived inbox. But we went over to Tallinn, you know, which nobody really knew as a center of like a hub for talent, but actually there's been, you know, some amazing companies come out of Estonia. And we went and visited them. They were going through an accelerator called Startup Wise Guys. And their original idea was that they were going to take scans from like maternity or people who were expecting, and then kind of 3D print the versions of that. That was kind of dismissed pretty quickly. So their second idea was, oh, well, actually, we have this technology. We could just start like doing full body capture. So Ready Player Me as Wolf 3D, it was originally, yes, they were doing avatars, but you would step into a kind of a physical, literally an egg. If you kind of Google it, you'll probably find a picture of the egg. You stepped in it, and then you got your 3D digital twin that they would post on Sketchfab and then send you the link. And it was literally, I remember walking through Tallinn airport very hungover after a night out in Tallinn, and then getting a 3D full scan. I literally put a couple of euro coins and it did the thing and sent me the link. So somewhere on Sketchfab, there is a digital representation of the most hungover I've ever been in my life. And then crazily, for me, I was at that point when I met them, I just thought like, hey, these are really, really smart guys, but they have this hardware component. I just don't see how it scales. So I passed, and I had this long thread from who is it? I think it's Casper from Ready Player Me, where he was like, okay, really, thanks for your feedback. It's been great to meet. And then he put like, P.S. I'm going to prove you wrong, which is a great response to give as a as a founder, a bit risky maybe. So that was 2016, and then because we had the relationship when we were raising the fund, I was aware that they were raising their Series A and getting very excited about the traction they had with their new product, which was effectively a pivot to Ready Player Me. And I basically had to spend 4 weeks begging Casper to let me into the round. So it was, yeah, I guess there's two morals to that story. Like, talented founders, you're going to pivot a couple of times, but if you've got the grit and the determination, then it doesn't matter how many rejections, you know, you can make it, and you can go and prove somebody wrong. I think the second thing about that story that's really interesting is just seeing the change in the dynamics there, right? I think a lot of people approach fundraising, especially in Europe, like people approach fundraising thinking there's some like kind of power dynamic where the VC has all the power and the founder is the person having to like ask for stuff. And actually know that you know, if you're a founder building something fantastic, then the power is on all your side. Like, the problem is mine. Like, I need to find a company that's going to be worth $1 billion. Like, that's that's, you know, like as a founder, you just need to recognize that the power dynamics should be equal. And the best companies I know and I've seen to go and be successful, like companies like Revolut, companies like UiPath, they kind of know that, and they just go into that fundraise with so much confidence and create scenarios where you're, as a VC, you're having to like work your way to get into the round rather than vice versa. Obviously, it's quite a different, you know, if you've gone out to your fundraise, it isn't going that well. But I think just having that attitude at the beginning and that mindset of just like confidence, knowing that like you're arriving because you're solving a problem for the VC, that just mindset shift is super helpful.
Okay, first off, thanks for saying that, because I try to reiterate that point all the time. All the founders that have come in here that have raised a lot have that, you can just feel it. Like they are worth you giving them money. They know it. I actually think a great thought exercise is, before you go into a meeting, like let's say you knew you were going to sell your company for $200 million in 6 years, like you knew the future, you could see that. How different would your attitude be when you go meet an investor? You know, it would be so much more about qualifying the investor. You know, do I want to make this person money? Like that would be the constant thought in your head as a founder. And so I think what you just said is one of the most important things people can really embody and take away, is like that confidence. Even though I know nobody knows the future, you have to believe that. And Wolf 3D is a great example. Timu, Casper, they had a really weird business in the day. You know, obviously didn't have a lot of traction, and then figured out how to raise 50 million from Andreessen Horowitz. And that's a great example. Another deal you have listed, there's three more, but I know you have a hard stop because you're at the Snapchat event right now. So let me pick one or two of them, and then we'll open up the floor for questions. Um, let's do, would you rather talk about Audio Mob, with you co-invested with Lightspeed Ventures, or Living Cities, which is Matt
Yeah,
Missing?
living cities might be better. Audio Mob, actually, it was an SPV we did when I was raising. It's actually Audio Mob isn't that on thesis for the fund, so
Okay.
I can talk to Living Cities. So yeah, Living Cities, I made a small angel investment in 2021. Again, this isn't a fund investment. This was an angel investment while we were raising. Living Cities was the next company of a founder called Matt Miesnix. If you're in the industry, you probably know Matt Miesnix. He kind of helped to create AWE, did a small fund called like Super Ventures, but then I think he's most known for he created a company called 6D.ai, which then sold to Niantic. By the way, I should recommend, he did a really good podcast for Jason McDowell, who does the AR show, where he talks about the process of selling his business to Niantic, and he's very honest and, you know, kind of bears all in that podcast. So I would go and Google that. But yeah, so really the story of that was kind of, you know, I do think it's, you know, if you're a second or a third time founder, it is just a lot easier to raise. Sadly, like people just, you know, like trust you and the credibility that you have. So that was really a bet into the team. And it was kind of wild because he was setting the company up with Dennis Crowley, who did Foursquare, and with John Getter, who obviously was like key in the VFX in The Matrix and is kind of a sort of living legend himself. So what that was just a kind of a pure founder bet. The vision of that was maybe too early. So what they were trying to do was kind of to almost like try and create a digital twin of real world places. And then have it so that you could be in that place virtually, like on your sofa, or you could go to that space and hold up your phone or have your AR glasses and see the kind of the play or the action that was going on around you. That company actually didn't work out. I think they realized after about a year that it was just too early. Like the vision was the right one, but the tech stack that they were building on, it was just going to have to take them too much to actually go there. So I mean, that's an interesting case, right? I mean, you know, experienced founders, very easy to attract capital, but actually they you know, the market timing was wrong. And I think for this industry, like that is the biggest lesson that I've had, is just you can have the best possible idea, you just have to be really realistic about the timing. At the moment, we're talking about I'm at this AR event, so I'm, meeting a lot of entrepreneurs who are doing stuff with like that require head-worn AR to be mainstream. But then it's like, well, is head-worn AR really going to be mainstream within 3 years? And then it's often like, as an entrepreneur, you're like, yeah, but I know it's coming. So I want to get the earlier mover advantage, because I'm, as a founder, you're always living in the future, right? The best founders live in the future, but the worst ones live too far in the future. So just about getting that timing right. When we do meet people who are doing stuff really early, what you really need to do in your pitch is kind of really have a kind of like a bridging, like, okay, well, it's fine because it's going to work on mobile first. And while we're building it out mobile, then we'll do this and then we'll do that, or whatever it happens to be. So you kind of always need to hold like, this is the bigger vision, but be able to kind of paint some very kind of clear steps. And I think one thing I've tried to stop doing is like investing in companies where it relies on someone else to do something. Like, oh, well, if Apple open this API and make it available to more users, our business will succeed. Well, I don't want to invest in that, because there's no way you as a founder can control whether Apple are going to do that. So that's just like too high a risk. If you're like, well, if Apple release this feature, then my business is going to like 10x overnight. But if it doesn't, at least I've got this other business that's playing on the Meta ecosystem or whatever it is. So so I think, living cities was sorry, I'm probably taking too long on each of these, but my takeaway from cities is, you need to kind of have your credibility as a founding team, but even experienced people can get the market timing well.
I was the one that brought Matt. I scouted them for General Catalyst. I think he's on his third business now too. I'm not sure on that, but there's a good example of just once you decide a founder's quality, keep betting on them over and over. Some will work, some won't, but like the one that'll work will pay off.
Actually, do you know what? Another good lesson from that is like, failure doesn't matter. I mean, 6D sold to Niantic, but it wasn't it wasn't like the $1 billion success catalyst. Living Cities failed, but he was very transparent and still maintained the trust of his investors, even that most of the investors. So I'm now a small shareholder in the next business that he's doing that went through A16Z speedrun. So it's the kind of thing where, like if you're doing a business now and you do fail, like don't stop doing businesses. You're actually probably more likely to get funding the second time round because you fail. Which I think in Europe, I think there's probably more US founders in your culture. There's like, failure is a badge of honor. Like in Europe, a lot of people see it as a kind of, a badge of disapproval.
Yeah. All right, so we're going to open up the floor for questions. If everyone in the audience can raise your hand, general rules for the questions. Try to keep your question generalized so that everyone in the audience benefits from the answer. You can raise your hand by going to the reaction tab in the bottom and doing the raise your hand. So I'll give everyone a quick moment to go through that. Dave, while we're waiting for that, there's a question in the chat here from Jeffrey. I'm going to reword it a little bit, but it's around the idea of basically how do you reach investors like yourself and just investors in general. Do you have any specific tips for founders when they're going through and trying to grow their network? Like what's the right process to do that? Events, cold emails, warm introductions, and let's maybe assume someone has no inherent advantages on the networking side when they do that.
Yeah, so I think, I mean, it's a cliche, but I think the best is always warm introductions. We have if you go to fov.ventures/contact-us, like you can fill out a form and we get a lot of submissions through that form. And actually one of those may lead to an investment, but it's usually the case, those cold outreaches, it isn't even necessarily that that we don't read those, because we do read every single one. We don't always respond to them, but we do always read every single one. It's just that in a way, if you're a founder, there's going to be all sorts of people you need to cold outreach. It might be somebody who's got a deal on an office in San Francisco. It might be a third hire. It might be, some biz dev partnership and you've got no idea. So I think just as a founder, you kind of almost need to prove, even if you've got no network, you kind of need to prove the skill that you can then go and network. And then, I would say events are always a good one. you know, people don't like being pitched at events, so it's probably better just to have a quality conversation or enjoy a drink together, or just, you know, have a quality interaction rather than be obsessed with like, oh, I've got to pitch the person this, because you can always interact with them and then follow up on LinkedIn. And when you're following up, you can say, hey, we met at that thing. And I'm much more likely to respond just out of kind of respect because we've had that in-person interaction. I mean, most VCs make it easy to find them, right? I mean, that's kind of our job. You know, we should be taking as many interactions with founders as we can kind of take with our bandwidth. But you will, you know, most people are a little bit overwhelmed, so you'll just need to kind of figure out ways to kind of like skip the queue. But yeah, it's a real mix. Warm introductions obviously makes sense. Yeah, I don't know whether I can add too much to the standard wisdom there.
But I love the idea that from a VC's perspective, you want the founder to be able to prove that they know how to network. And fundamentally, that is going through that cold networking process. So I think that's a
Yeah,
great point.
I think one thing that people don't do enough of is like doing their research. Obviously, if you've got a list of like 50 VCs, you're not going to do your homework on every single one of those. But if you've got a pipeline of 50 VCs, there's probably 10 that you think are the ones that are going to be your preferred people. And then just go and follow them, like follow them on LinkedIn, follow them on X, like figure out where they're going to be. Like that sounds a bit creepy, but like there's a lot you can figure out from people. And then one thing that a lot of people don't do is then look at the portfolios of the companies. And then if you can't reach me, like reach one of the founders in our portfolio, get an excuse to get along with them. And then, you know, they're going to introduce me. So yeah, I think it takes a bit of time, and you're not going to do it for your entire pipeline, but just, you know, highlight your top 10 and then go, you know, a little bit kind of creepy deep on figuring out who's connected to them and, you know, find a way in.
That's awesome. Yep. There's always a door. All right. We're going to bring up Jeff here for the kicking off question. Jeff, thank you for being brave and stepping up there.
For sure.
And
Hey, Dave, thanks for your insights today. So yeah, I'm a founder working on a product that's going to help people create a digital twin of themselves so they can interact with in mixed reality or just on their mobile devices. So we're super early stage. We've got a beta that we're planning to launch coming up in a couple weeks, but I kind of want to ask you, you know, maybe based on some of your experiences with SoundCloud or elsewhere, like how you go about getting that initial traction, building that initial audience who's going to really be your evangelists. Yeah, I'm just trying to collect some tips from everybody who's gone through that right now.
Yeah, so I would say, I mean, there's a saying which is like, you know, minimum viable product, right? So it's like, okay, how do you get to the product that's good enough to start showing people? I think something that isn't talked enough about is like, what's your minimum viable segment? So you might have an ideal customer, but there's probably a slice of that customer which is even more ideal. So yeah, think about minimum viable segment, like what is the person that you can go to first, which is just most likely to adopt your technology. And then Chris Dixon has a really good post. You can look it up, called the bowling pin strategy, where it's like, okay, go to minimum viable segment, find that first person, and then there's probably two people that are then adjacent to that, and then, you know, and then you need to just be kind of broadening out. So to directly relate that to SoundCloud, like our minimum viable like segment or minimum viable customer was like, it wasn't people in music, it wasn't independent musicians, it wasn't even people in dance. It was like literally like Berlin, like techno DJs in Berlin. It was like, right, let's get those people first because they're the coolest people. And then like, hey, well, maybe after we get those, maybe we should get some like Italian artists, because Italian artists are really like, they love shouting about what they do on like MySpace. And then it's like, oh, and then let's get these people. And then, and that was a fairly deliberate strategy. And there was a time where, I mean, SoundCloud, the first era, I mean, pretty much was just kind of like people into electronic music. And then it was like, now we need to figure out how to go to hip hop artists, because they're typically later adopting, but when they get into the tech, then it goes wide. And so, yeah, you just need to think about like, what is that like, you know, initial profile. So I guess if you're building digital avatars, I mean, there's also a question is that a B2C product? Is it B2B? Is it B2B2C? So I guess you've probably got a few questions on just how do you do go to market and who are you targeting first, right?
Yeah, definitely. And definitely thought about like, do we do B2C? And we're kind of aiming at B2C as a starting point. Still keeping in mind like a lot of really useful B2B use cases. And there might be a pivot in there somewhere, who knows, as we kind of explore those markets. But yeah, trying to really figure out like where those customers are going to have the strongest need for that kind of product.
Yeah. Are these photorealistic avatars?
Yep, that's the plan. Yeah.
Yeah, got it. Yeah, I guess, I mean, one challenge as well would just be kind of, I feel like the avatar space is very busy at the moment. So
Yeah.
it might also be not just kind of who do we think is the customer with the most need, but it's like, where do we have some like differentiated value? Like if Apple are, have personas and these, and, Synthesia have these for this, or, what is the, yeah, what is the use case that you're going to serve best, given that there are a lot of different people working on like digital twins and photorealistic avatars?
Right. Yeah. And our hypothesis is that we're trying to aim at like the memory preservation and journaling space so that people can, store their own stories and memories for future generations. And so really making it easy to make, an exact copy of yourself that's powered by LLMs at the back end.
Got it. Got it. Nice. Awesome. Well, yeah, I mean, also you have good creds as a founder, right? So you've got on your LinkedIn X HoloLens, X to AWS. So yeah, that's certainly a good start when you're pitching, just having those creds of those big companies.
Sure. Awesome. Thanks, Dave.
Dave, Mr. Multitasking. That was impressive. Thanks for doing it. That's awesome. Let's bring up Naga here. So Naga's in the DoD space, which I think we all believe in is a great fit for AR VR, but a tough market in general. Naga, go for it.
So my question was mainly in regards to we have a minimal viable segment, and we've targeted to customers, but the product life cycle in DoD customers are extremely long. So I'm trying to find a secondary MVS to help accelerate sales for radios. But my main question is, how do you determine when an MVS is not working out? Like in your example with the SoundCloud, you decided it was techno. Okay, we grew out the space. Now we need to go to the next space.
Yeah. I feel ignorant. What DoD is that, defense or?
Department of Defense. These are for my system. Um, yeah, that's a better way to phrase it, Don, is how do you determine when your MVS is not working out?
Yeah, got it.
Um,
And maybe just quickly describe the product so I've got the context. Like, what does the product do?
so our product or 5X's product is a iridium-based satellite tracker and communication system for emergency response systems. It's when our LTE radios fail and MAN-8 systems are clogged due to weather conditions. That's the only reliable means. Our main customer market has been the DoD. We have traction. Um, the other commercial customer, the Bahamians, have been slow and the volume's not been significant enough. I've been also irate with Iridium and their delays because what should have taken a year ago, it's been 3 years now. So when do you, to your point earlier, when do you stop relying on your partners to deliver? And I'm going, you know what I mean?
Yeah. That's a tricky one. I mean, the good news is like defense tech seems to be like super hot and sexy, like everywhere, including Europe at the moment. So there is venture dollars to be had. But yeah, specifically around like customer segment. I mean, it is a challenge, especially when you have like really long sales cycles. And also, like, I feel like in this space, it's very easy to get caught up in like what seems like kind of false positives of traction. So, you speak to a large company, the innovation officer is really keen to do like a POC, but that POC is just, it's like the kind of the innovation sort of, theater, and it's not actually going to lead to customers. So yeah, so that is a really tricky question, because sometimes as a startup you don't have 18 months of capital to go and like do that long sales cycle, right?
That's literally what I'm dealing with is like, okay, I want to go raise money, Don. Let's start raising some money for PFM because the sensor's pretty much done. I just need to finish out some ML algorithms and target them for niche applications. They have a bunch of sibbers they're posting.
Yeah, yeah, tricky. I don't think I'm going to have the silver bullet answer for this, but I would say, I mean, I've seen a lot of companies in VR. Like, well, let me give you one example. I don't think this really answers the question, but like we had, I invested in what is a relatively small company called Immersive Factory. They were doing like enterprise VR training. And they were just finding that like they had the same problem. Like it was just really difficult to convert customers because not only did you have to convince people of like the software and like, hey, we're solving a problem, but you then also had to figure out like, how do you get this through the IT team? And they've got security concerns. And like, there's just this long checklist of reasons not to kind of buy the product. So in that space, they were like, right, well, there's a great post by Paul Graham, which is something like, do things that don't scale. And I think oftentimes it's really drilled into us, like, as a startup, you have to do everything in a way that like fully scales from day one. But I think sometimes at the beginning, there is just like an 18 to 24 like month, just kind of hand-to-hand combat. Like, let's get these one or two things over the line. Like, let's just, maybe you do like, this is counter to most advice you'd get in venture, but sometimes you just need to do those to like secure that one runway. The good thing is sometimes you can get one customer and the payoff is you then get like $1 million contract. And even though that's not a scalable, repeatable like thing, at least that gives you revenue to then like go after the other people. So yeah, I don't know. Like I would say maybe you just need to kind of look for like, what are some quicker wins that just give you capital to keep going. I've got no idea what your finance history and stuff is. The other thing you could do is just like completely reframe the story and just go and raise like on the back of a sort of, hey, defense tech is the new thing. But I don't have enough context about your raise to really give the best advice there.
Well, one last question is shameless plug. Could I get an intro to Cube technology? Because I do use a micro LED in my application. I would be interested in learning more.
Yeah, nice. Yeah, the other thing I'd say, this is harder in the US, but like we invest in a lot of deep tech companies, and quite often we're investing once somebody's like secured some R&D funding. So it's like non-dilutive, and it usually comes with a bunch of bureaucracy. But in Europe, at least, there's some like, there's some pockets of great grant funding that can be tapped into, which kind of de-risks some of this kind of like lengthy like development cycles stuff. So, but I don't know what the situation is like that for that in the US.
We have an equivalent. It's the Sibbers over here in the United States. They will give you money for there's phase ones, which will basically give you $250,000 to finish some milestones, and then phase two is basically a small volume order for about up to 2 to 5 million, and then phase three is basically a large.
I gotta move on to Gregory because Dave has a hard stop. He's at the Snapchat event, but thank you for the cue. Shoot him an email on LinkedIn with that request for the intro. Maybe he'll do it. All right, Gregory, hello. Before, just one last point, Dave. I think on the revenue that you're talking about, it's a problem across all of AR, VR, defense, consumer, enterprise. It's a tough selling point. Even if you have revenue, it's not scalable. It's too much agency work. There's not a big enough market for subscriptions. It's a problem across everyone. And so it's a tough question to answer. All right, Gregory, sorry for that. Go for it, bud.
All right. Hello, Dave. I'm shocked we haven't met earlier. I actually I gave Jenna Seiden her very first headset before she joined HTC. So I actually had some questions about the mechanics. I really appreciate the knowledge you shared about like how to do your research and stalk the VCs. But my question is, when getting that initial pitch meeting, I'm a person who prefers face-to-face, and some very veteran founders I've talked to have basically said like, throw the pitch deck out the window and just make the human connection and look eye to eye and tell your story. But I found that very hard to do with most of them, like saying we need the pitch deck up front. And then actually the first meeting, like when we met with Andresen, and it was a Zoom meeting, even though I was in Silicon Valley, and I was like, let's do face-to-face. So Is that standard procedure, or is there a way to make sure that that first meeting is actually face to face, you know, with your management? And because I feel that's a higher bandwidth, more successful interaction.
Yeah, I think that for me, that's just becoming a norm of fundraising now. And whether that's me pitching to LPs or whether that's kind of you pitching to VCs, especially if you're kind of, you know, it's a more junior, like it's an associate at the firm or something. They're just going to do like, hey, look, for efficiency, let's do the first meeting. It's more of a screening, and like I just want to hear what you're doing, ask a few questions. So I think the new normal is that I think you have to go in expecting that the first meeting is going to be on a video call. And I think that is really, you know, I think it is just a fact of life that is suboptimal. Like we've made a lot of mistakes because we haven't met founders early enough in the process, like in person. And I've actually, like, I met someone at the event before that I think we passed on. Like now I met him in person. Like there is a bit more, like I can just read him a bit more. I get a sense of kind of, you know, his personality, which is really important, especially in the early days of investing. But I think the reality is that just people are doing, you know, they're trying to be a lot more efficient. So I think there's two things. One is you just have to, like, you know, if you feel like you're not good at, like, you know, pitching over Zoom, then you need to kind of, you know, figure out a way to improve. And then the other thing is just to go back to, you know, quite often, again, like if it's a warm introduction, it depends who the person is, but sometimes I feel a bit more kind of duty bound to like, right, I need to make this first interaction really good on my side as well. So, and it depends who that, if an LP sends me a startup, I'm probably going to make sure that, like, you know, I'm doing that in person. I'm giving them the, you know, so that there is just those circumstantial things. The alternative is then, you know, you can try and meet them at an event, like you can try and, you know, there's other ways to get in front of them. I would say for me, when I like to be pitched, whether it's Zoom or in person, I really like the entrepreneur or the founder to have sent me a deck up front. It doesn't have to be the full deck, but just something that gives me a good enough view of the business. And then ideally, your expectation of the investor should be that they've read the deck, and you may need to pitch them again. But it's you know, I feel like it's my job to now ask questions and have like understood your deck as much as possible. And I would really recommend. I think when you're on different people will have different advice, but I think it's better if you're a founder, if you ideally you say, have you looked at the pitch deck? If they say yes, then just go into it and don't be like, oh, let me wait 2 minutes and I'll share my screen and we'll do this and like do that. If the first 20 minutes of the meeting is just literally you go, you know, clicking through and giving me the pitch, then that's not the ideal way. You should have already got me to kind of understand a little bit. It's really difficult though, because a lot of VCs may have not read the deck, or I might have had a really busy week or something like that. You just need to be versatile.
Okay. Thank you so much.
Dave, can I ask a part two to that? You said something earlier about being social versus like building a network, and then you can always go back to that investor versus presenting the deck right away. How do you think about first meetings? Like, would you rather just casually network, have a beer, and then they can always follow up with you later once they know you and basically they don't send you the deck? Or are you trying to like be more the transactional, hey, you're either a good fit or not, send me the deck? How do you think about that?
I think everybody's slightly different, so it's really hard to generate one rule. Yeah, for me, like I work from home, for example. Like I'm only in London once a week, and I mean, maybe it's different in the US because everyone's in San Francisco, like, but there is just kind of, you know, also just logistical barriers nowadays. Like people, I think it's just you know, everyone will just default to doing the first Zoom call now and then. If you can have a in-person interaction either shortly before that or shortly afterwards, then that really helps. But yeah, I think the reality is, I don't know whether I'm answering the question at this point, but yeah, I think the reality is it's gonna you need to be covering both of.
Okay, I know you have a hard stop because you have to go to this Snapchat meeting. Can you do a going away? What's your best advice for founders? Just the number one thing that you think everyone should leave this meeting with?
Oh, there's so many things. Yeah, I think the one thing is just kind of, what I said before about leading with confidence. It's like all of these things, if you are just kind of, if you're confident, if you've had a recommendation, if you've done something, like you need to start on the front foot. And ideally, like there's definitely meetings that I take where I just come to the meeting with a totally different vibe. I'm like, I'm leaning forward. I'm already excited about the call, or I feel like I need to do the thing. And like, yeah, there's not a good answer to how you create that, but there's just a certain vibe that some founders give off. And it's a mix of confidence. It's creating a sense of urgency that feels kind of realistic. Like we could speak for 10 minutes about that, but just thinking about the process. And then with that, I would just say, like, whenever you start a fundraise, like really do your work, like make sure you've got a pipeline, you're running it like a sales process, like you're saying, right, I've got 8 weeks to go and run this process. I'm going to speak to these 10 VCs as my first wave, these 10 as the second wave, and it can be different strategies, right? But you need to pick what it is and then just go and like hard out, like just run the process. I think the problem is when you're just doing a little bit here and there, like, oh, maybe I'll do 2 things here and then I'll go to an event and then I'll do that. Like, no, it just needs to be a strategy. The strategy could be, I'm going to speak to these 4 people over the first 4 weeks, or it could be, I'm going to speak to these 50 people over 2 months, but just figure that what that is with your co-founder or one of your existing investors and just go and run the process as hard as possible. And then if you don't manage to raise in that time, like pause, stop, think about what you need to do, stop the fundraise and come back and then do another process in a very structured way.
Awesome advice. Totally agree. Well, you're the first guest that had 2 different pairs of AR smart glasses on for us. So thank you for doing that. We'll let you out of here on time. I know you have that next stop in the hard meeting, but thanks for joining us.
Yeah, feel free to reach out. I do check LinkedIn, but sometimes things get lost. My email is dave@fov.ventures. I would say just a caveat, like we currently only invest in European founders. We have like 3 US companies where they have, operating companies in the US. So I know there's probably a slight US lean to the audience. So happy to chat and give advice and stuff like that. But if you go to the website, you'll see, just qualify that, we're investing mostly in European companies, but I'm always happy to kind of, if it's a great company, also happy to connect you to other investors if it's not for us. So yeah, thanks, Don. Really appreciate the invite. Hopefully I haven't talked too much and have said something helpful.
We're cheering for you to raise this next fund. So keep us updated. Thank you, Dave.
If anyone knows anyone who wants to invest in a fund, then also feel free to send me investors. So
you want to get Dave's funding to your startup, introduce him to a rich person. That's the easiest way to do it.
Nice. Take care.
Thank
you.
Yeah, appreciate it. Thank you, Dave. Have a good meeting. Appreciate your time. Bye. All right, let's go. Everyone that wants to hang out, feel free. So he knows his stuff around AR, VR, and all this stuff. I think he's well. Oh wait, all right. I'm gonna have my old computer fried, and so I gotta. One sec, this is gonna be an issue. If you guys want to go through some of your lessons, I'm gonna just handle this. Give me 30 seconds.
I thought the segmenting the customers to find your first set of customers is a key, because you cannot go for this broad thing, and you have to really target your first beta customers. That's one thing I learned.
MVS, yeah, that was a good term. Most viable segment.
Yes.
Yeah. I also found the thoughts about false positives very instructive. I do have a little follow-up question on that. How does one identify when something is a false positive? Because how do you know when you're being strung along, before you?
Do you mean on the VC side, or are you saying Naga's question around revenue? Oh, we lost him. I think so. Naga's question, I think, was a great question around like, when do you give up on an MVS segment? I think that's probably a gut check type of thing, Naga. And like if you inverse that question, if I've found if something's gonna work, it usually works right away. And so obviously, some things take longer, but I think pushing through past a certain point is probably detrimental to a business when you can either reframe it for that same MVS or look for somewhere else. I think that's Teo's question.
That's a great way to re-ask that question is when do we frame that? Because like the struggle I've seen, maybe I'm in a unique industry here because this product cycles are freaking ridiculous. 2 to 3 years before a product gets accepted, roughly. It's as bad as the medical industry. So with that sort of intensity, I don't have that type of capital. I'm not that rich.
But I do think Dave's point here was a good one, where it's like, yeah, maybe you can't validate with customers, but there are smart people writing those grants that you can get some validation with and funding. And so I thought that was that was a thoughtful answer to your specific type of industry, is supplement a lot of that with the grant funding.
And I think it also gave me a good stage gate. Like there's a good book from Colin Campbell about start, build, stop. It's about building startups. He's exited several times, but the idea there is you make that minimal product, and once you get adoption is when you start worrying about scaling. But in all the meantime, you got to keep the lowest costs for the internal development. But again, I'm talking to my unique customer. But the stage gate that I want to put to that is probably a SIBR based on this conversation today. Getting a phase 1 or a phase 2 SIBR and then going to VC is probably what I'm going to end up doing.
Yep. Did anyone have thoughts on his fundraise tips?
Hey, Don?
Yeah, go
Could
for
I
it.
ask, how important is it to actually have your demo when you're just doing a seed round, to have the demo ready? And what I really liked what he was saying, like what we did is we scaled our deck down to just like this mobile simple version off of a previous game that we had, but our full version is way up, using AR, mixed reality, holograms. We had this full version, then we decided to like scale it way back. And then, so now what I really connected with there, what Dave was saying was, start with something that's realistic that you can gain audience, mobile, and then you might have this whole VR, AR, whatever, vision, but don't rely on that just being your monetization at this time if that's not fully adoptable by the the consumers. So but how important is it to have that first demo when you're raising your first seed round for a project?
Just to make sure we're getting the same terminology, I think having your first demo for an angel round, so if you're raising 100 to 100, you can get away with storytelling and relationships, depending your advantages there. When you're going to the seed round, which is the $1.5 million to call it 4 million,
Okay.
at that point, you definitely need some commercial traction. But to get your first 100K, a lot of that can be done on who you are as a founder, your track record, and then some proof of demand. I think that's the number one thing that has changed in VC over the last, call it, few years, is that at any stage, you have to prove that you have more demand than you have supply, basic supply and demand. And then you explain that them giving you that money allows you to satisfy that demand. So the best way to do that is do a bunch of pre-orders for a product that doesn't exist yet and collect the money from customers. And then you go to VCs and say, look, we literally proven that people want this and we don't have the ability to give them a supply. that's number one, like easiest pitch, because it shows you know how to sell, it shows you know how to monetize, it shows you know that there's demand. Probably like the lower end of that scale is a waiting list, which is like, hey, 2,000 people gave us their email and they want it. And so we know if we build what was on our landing page, you know, some percentage of them will use it. And then there's kind of like a number of different things in between. But I would say that's the number one most important thing is being able to prove that there's more demand than you currently have supply at pretty much any stage of the business.
Great, thank you.
And then specifically for your demo question, you know, it's always better to have a thing than not to have a thing. So if you can figure that out, obviously it's to your advantage to have something that is tangible.
Yeah, we've started to work on that first demo. Yeah, so we figured that's probably the best way. Also in presentation, then we can really present it, and there's something tangible instead of just the idea in the deck. Yeah, great, thank you.
And another thing Dave said when he talked about, you know, sometimes it's easier to pitch a really experienced VR investor, and sometimes it's harder because they've seen so many ideas. I think the key to unlocking that capital is the founder recognizing all of the issues with VR before the investor has to bring those up. So my last business was a VR company. I mean, obviously I'm building a VR company. That was my motivation, but it took us probably 2 years before we even had our VR demo. We first went PC, then we went Android, iOS, and then eventually did our headset. And so, you know, that was also a real trough of disillusionment for VR in 2017, 2018. Like that was not a trendy, you know, topic at all amongst VCs. And so one of the key things was me basically going into pitches and saying, look, VR sucks. I agree. Like, let's get that out of there the first 10 seconds. But knowing that it sucks, here's how I'm going to, you know, build this company. Is first we're doing PCs because there's 200 million of them out there. Then there's phones because there's this many out there. And then eventually, if that's all working, we'll do VR. And like we had probably raised 2.5-3 million before we got to actually putting VR headsets anywhere into our deck. And I think Dave brought that up and is a really important point, is like you can be a VR company, but not building VR for years and do that as a fundraise strategy, because you need to go where the market is and also what you're going to be able to get money for. And it's hard to get money if you're pure VR right now, and forever it's been, really.
Thank you. Very helpful.
Real quick. So next week, my computer is, I think everyone heard, but my computer fried. And so I have to go pick up a new one today, but hopefully this works. But okay, next week we have, well, next 2 weeks, we have 2 special guests here. It's pretty epic. Next Wednesday, we have Luke. So if anybody knows Manage XR, if you're doing anything in the enterprise space, healthcare space, or education space, you're probably very familiar with what he's built. I don't know what numbers I can say, but that's a very healthy business, and he's raised a decent amount of money, but has really outpaced his amount of fundraising and his revenue and his traction, and just has built an incredibly strong business. And he basically supplies the management systems for large deployments of headsets into organizations. So if you're a hospital and you have 50 headsets you need managed, his software interfaces between that headset and the apps and the users, and pretty incredible company. When I met him and like got some of the details maybe 9 months ago, it blew me away. And I think it's one of the like more low-key strongest companies in all of XR. So he's going to come talk about how he's done that, how he's prioritized sales. It'll be a really good event to come join. And then I think every one of us know Nanea. She's coming on December 29th. She's the CEO of Trip, and she's going to put a twist on the XR story and talk about how you frame your fundraising story so that it leans in more to the AI angle so that you can attract the right investors. She's raised 28 million, 26 million. But she's going for a next round. And so she's been pretty transparent with us in the past about some of the challenges that, you know, all XR companies have, and how she's very intelligently going about and combating those. So as always, RSVPs are in school. I'm gonna go fix this computer. It's driving me absolutely crazy. Does anyone have any last questions or points? Literally, if you heard it, it sounds like the fan is about to explode. The RSVP is in school, and then I just put in the chat as well. But if we don't have any other questions, then we'll hop off and we'll do this next week. Samson, I saw an unmute there. Was that a?
That was just always to say thanks again for setting this up. It's been great.
For
Yeah.
sure. They don't work if everyone doesn't show up. So I appreciate everybody.
No, it's always good insights for sure.
Yeah. Yeah. Dave's awesome. He's nice enough to share his email. I would not be sharing my email to a room of 60 people, but some people are brave. So Dave at FOP.ventures if you want to message him. All right, everybody. Thank you. I'll see you in school and have an awesome day and see you next Wednesday. Bye, everyone. Thanks for coming.
Thank you.
Yep. Bye-bye. Time to fix a computer.